Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational company and swing trading full-time with my students. As usual, in this video, I will be giving out some more free multi-time frame analysis and order flow perspective on some pairs in the market at the moment, specifically the pairs that you requested in the comments below in the last video. So without further ado, let's get straight into it and let's provide some free value for all of you, showing you how you're supposed to be approaching your trading from a reactive perspective and not predictive, and how to structure your strategy and trading plan by using the concepts that you will learn in my videos. Okay, so definitely gold and GBP USD have been the more requested pairs that we have to analyze. Obviously, gold is not as a commodity, but the more requested instruments to analyze in this video. So let's get straight into it. We will start with gold, then move to GBP USD. Now, both still need more development before we can even start considering a position with the students. So maybe not the best pairs to ask for at the moment, but let's start with gold. So the first thing that we have here on gold is pretty clearly overall what we want to see from a weekly perspective. Now, I know many people have been shouting up for the longs from this area on gold. I'm not the one that likes to buy from the high and sell from the low. I like to do the opposite. I like to sell from the high and buy from the lows. So if I see a market that has created a big impulse to the upside, I suggest to all of you to be looking on lower time frames for a short position. Obviously, if you get more confirmation, we will now speak about it instead of a buy. Now, gold is has clearly made all of this impulse to the upside. Now, at the moment, where is the structure? The structure is here. We can clearly see that overall we have some nice structure, previous resistance to support at this level, and we want to see the market make a deeper retracement inside of this area. Now, if we take our Fibonacci from a weekly perspective, from the low to the high, what we can see is that overall the market, yes, already hit the 382, but at the moment, this candle, if this candle will close with a this is something a little bit more advanced. Let's just keep it on the sidelines at the moment. So overall, the market has hit the 382 Fibonacci retracement, and we want to see the market go a little bit lower to make a deeper retracement, which is normally in a healthy trend. You will see a deeper retracement and then continuation to the upside. Now, if you go and see what banks have been doing on gold, there are a couple of things that you can immediately see. Now, what you can see is that banks have been buying a lot of gold. Okay, they have massive long positions, and we want to see them take some profits out of them, because at the moment they have 376k longs. They have started to take some profits because they went all the way up to 383k longs. Now they are at 376k longs. So overall, a little bit of profit taking has been already done, but we want to see more profit taking. We want to see a deeper retracement from a weekly perspective. And what is going on from a daily perspective? From a daily perspective, what we can see is that at the moment the market has finally broken the structure to the upside. Last time I spoke about gold was around this area, and what we were speaking about on TradingView was simply we want to see the market make this push to the downside and reach our first target to the downside, which was here. And now our first target to the downside has been reached. Basically, we have tested the previous low. Now, this is obviously support. Is very clean support from a daily perspective, and definitely, yes, the market did react to this area. Now, keep in mind that at the moment the market is approaching new resistance, because this was the previous support, now resistance. So from here, that is more or less the zone from which gold is supposed to start the new impulse to the downside and break this support to the downside and go to our overall downside target from a weekly perspective. So overall, on the 4-hour time frame, what is the situation? Now, as you know, on the 4 hours at the moment, everything is bullish, right? The market has shifted, creating this kind of weird head and shoulders, made a push to the upside. But simply put, the market has created a higher high, because look what the market did: up, down, higher high. So at the moment, this is previous resistance, now turned support. So if the market will go down, it will find support in this area. And unless this structure evolves, which probably will evolve, this is the situation. And before you can be looking for a short, you need to at least wait for this support to break to the downside. But at the moment, this is what we have. Now, from a swing trading perspective, what we will be doing with the students, obviously I can't tell you my rules for entry, but we will be monitoring price action inside of this area waiting for the market to provide to us one of our valid entries. At the moment on the 4 hours, everything is bullish. So if the market just continues to move to the upside, we will obviously not be involved in the trade. But if the market will provide to us one of our valid entries inside of this area on the 4-hour time frame, because always remember, on the monthly, weekly, and daily, that is where you're supposed to take your direction. The 4 hours is just for the entry.
Just a quick reminder, make sure to comment below and let me know which pairs you would like me to analyze in the next video.
So if the market will provide to us one of our valid entries inside of this region, we will definitely be interested in this short with a very good risk to reward and very good probabilities for this push to the downside. The other pair that I wanted to speak about is, as you know, GBP USD. Now, GBP USD at the moment, I will start basically from the last time I spoke about GBP USD, because at the moment I am not monitoring it because I need more development on GBP USD before I can start basically looking for an opportunity on it, because this is the situation. Okay, last time we spoke about GBP USD, the market was around this area. The market was here, and we were speaking about the fact that we had broken the structure to the upside, and from here we could be looking at another long position. But what we have seen when the market went inside of this area is just straight down, right? No kind of bullish price action, zero bullish price action. So obviously we can't be looking for a long if the market doesn't give any kind of confirmation on the 4-hour time frame. So obviously at the moment, what the market did, at the moment the market also broke back below this trend line and already retested it. We spoke about the fact that if the market now would have broken back above this trend line, then on the retest of it, we had a very nice fake breakout and we could easily take this long. But at the moment, everything is bearish on GBP USD. But I don't want to be looking at the short at the moment on GBP USD. It's not something I want to be looking at because it's too risky, because banks have been accumulating, price has been doing nothing basically. Inside of this area, price has really been moving inside of this range, doing nothing. And all inside of this area, we have reported from a COT perspective that banks have extremely strong buy positions. Okay, it means nothing. It doesn't mean that GBP USD will start to push to the upside immediately, right? Because obviously they can hedge, they can do a lot of things because they have a lot of money. But I will not be taking shorts against this, against doubled their long positions. We have seen that hedge funds have doubled their long positions and closed their short positions in half. We went from 88k to 44k shorts. And if you look at the longs, they doubled their longs. And if you look at the net positions, we went from minus 52k net positions all the way up to 17k net positions. I will not be trading against this big shift. So what will I be doing? As usual, guys, I will be reactive and not predictive. There is full of pairs in the market. I don't need to trade necessarily GBP USD. I can wait to have the best probabilities, and then I can be looking at an opportunity. Look how many pairs you can trade. Just find the best probabilities in the market. Okay, you want to trade with the banks and with the technicals showing the same direction, meaning that the move that the banks have been preparing for is ready. Because keep in mind that they have so much money that first of all, they need to create the liquidity to actually fill in all their orders. So they have to do a lot of manipulations and bring traders to the wrong side in order that they can fill in their orders to the right side of the market. And then this will take a lot of time. And then at that point, we will actually have the real moves and the technicals will be aligned with what we see from a hedge fund perspective, so a COT perspective, and what they're doing. And that is where you're supposed to enter for the best swing trades, highest probability, and best risk to rewards. So at the moment, what do we have here is a market that I'm not looking to trade unless we see a break back above this area, which means also a break back above the trend line. So if the market will break back above this area, then on the retest of the area after a minor retracement, there we will have a very good opportunity, very good risk to reward, very good probabilities, and we will definitely be monitoring price action with the students for a good entry on the 4-hour time frame. And as soon as the market will provide to us one of our valid entries on the 4-hour time frame, we will definitely be taking this long with a good risk to reward and good probabilities for this push to the upside. And this is something that in general you need to understand. You need to understand that you can't just trade based on what what COT is showing you, because now I see everybody asking me, how do you find the tables? How do you find the tables? It's pretty simple. Okay, you just have to take the data and put it down and understand how to read it, because it's not enough just to have it. You need to understand how to read it and relate it to the chart. Understand basically on the chart what they have been doing, because they can hide their orders. You need to understand how they're hiding their orders. If the report comes out and as soon as after they reported their positions, price made a sharp move, they just tried to hide their positions. A lot of things that they can do, you need to understand them and know how to relate them to the chart. And in general, you need to have a clear strategy, a clear set of rules that you know they work because you have back tested them, live tested them, and you have to apply them over and over again without emotions, because too many people follow emotions and it's not something that you're supposed to be doing. If you have a clear strategy, a clear set of rules that you know that they work, you will not have emotions. If you have emotions, it means that you haven't tested your strategy, or even worse, you don't even have one.
If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free analysis and education for all of you, as well as going and checking out the mentorship program by clicking on the link below, because that is the best program that you can be in. First, you get all the rules of my strategies, and then you trade them with me each and every day. I give you a new daily market breakdown showing you how you're supposed to apply them. And I also answer every question that you have with the video explanation each and every day, including the weekends. I'm very dedicated to teaching, so make sure you go and check it out, or go and check out the next video.